Let's get ready to rumble. What's up, guys? It's Mr. Fit to Flourish, back with another video. Today, this is part 2 of chart reading basics. Let's get right into it. All right, so continuing our chart reading basics, we know how candlesticks look now, Japanese candlesticks, and now we're looking at trends. So what is a trend? A trend basically is the direction of price movement. And here, this is a uptrend. An uptrend is bullish. Why? Because remember, bulls mean that we're optimistic, price is going up. So price, in this case of all these candlesticks depicting price movement, price is going to the upside. So therefore, this is called an uptrend. What happens in an uptrend? You're getting higher highs, so higher highs on prices during given time periods, and you're getting higher lows on these given time periods. Higher highs, higher lows as price moves to the upside. Now a downtrend is just the opposite. So a downtrend is bearish. Why? Because bears attack downward. Bears means pessimistic. Bears also means that price is moving to the downside. Therefore, we're getting lower highs and lower lows as price is moving down. Now, trends can help you to make a prediction of where the candle is going to go next, and you always want to trade in the direction of the trend. So, for instance, if prices have been moving down for a long time, you don't want to try to buy the stock or buy options that are saying or implying that the price is going up, because it's not. Because over a long period of time, we can see prices are just falling out of the sky. So you don't want to try to buy here. You want to be selling. Or you want to be making money getting puts or shorting a stock, however you can, in order to take advantage of making money while price is going down. So in a downtrend, you want to buy puts and you sell stocks. In an uptrend, you buy calls and you buy stocks. So what is a put? A put is basically a bet. It's an option, and it's a bet that the price movement is going to be moving down. And a call is basically a bet that price movement is going up. Just to make it simple on options, which we will talk about later on. We're going to be talking a little bit about patterns as well. So a flag pattern, this is a pattern in the chart, and it helps you predict what will happen next. So basically a bull flag is an uptrend that consolidates in a direction like this, which basically moves kind of up and down sideways for just a little bit before breaking up again. A bear flag is just the opposite, when price is moving down and then the stock starts to move kind of sideways a little bit before making a final move down. Pennants are very similar. However, price movement kind of looks like a triangle, and it moves up in a bullish pennant, does this triangle formation, then continues its move to the upside, and just the opposite in a bearish pennant. So that is all I have for you in this video. This was the continuation or second part of chart reading basics. On our next video series, we're going to be talking about the most important candlestick patterns to look at and to memorize. Okay, this is going to help you quite a bit in terms of gauging the direction of the future direction of stocks and making predictions. So I hope you enjoyed this video. It's Mr. Fit to Flourish, and I'm out. Peace. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.